Hey everyone, welcome back to Upside Down Data. Today I want to talk about the possibility of a bear market rally in the near future and what we might want to expect if that happens. So it might be a little bit sacrilegious for me to be even suggesting that we might be getting any kind of positive price movement here so far with Bitcoin or anything in crypto, because really, things have been pretty bleak ever since the FTX collapse. We've gone all the way from November through now, as I'm recording this on the 8th of January. And for the most part, Bitcoin has done very little, right? We had one run up to about 18K, but more or less just been stuck kind of around the 16, 17K range that entire time. I think people are getting quite bored. A lot of people aren't even paying attention right now. So the thought of Bitcoin being able to move back to the upside, I think, is pretty far from people's minds right now. A lot of people are expecting it. But we do know that bear market rallies do happen. We've had a couple in this bear market already. I've highlighted a few. A 46% rally back here in, from January through March of 22. You had another one here from June through August of 22 as a 43% rally. And then, of course, if we just go back to prior bear markets, the bear market itself going into when we actually formed the bottom, you'll see that we had a number of different rallies. Now, one of the things that people were upset about or kind of complaining about with this more recent bear market is that we didn't get these really extreme bear market rallies like we've seen in previous bear markets. This one back here in 2018 was almost 100% rally, starting in February of 18, going up through March of 18. Then we had a 50% rally, another almost 50% rally, and then a 35% rally here right off the bottom back here in December of 18. If we go even further back to the bear market before that, we again see a lot of volatility, over 100% retrace move here back in December. We saw a 80% move here, 100% move, 70% retrace. This one here, 88. This one here, 93. Now, as we're kind of getting to that sideways chop coming out of the bear market into the next bull market, you've got pretty severe volatility even in that kind of sideways chop. I think a lot of times when we look back at this point, we just think, oh, it's just really boring, just things going sideways. Well, yeah, but were still some pretty extreme rallies that happened within that sideways movement. And we haven't really seen a whole lot of that in this bear market, right? Two of these is really pretty small compared to what we've seen in the past. And so in some ways, not to say that we're due, because who knows what's going to happen. Nothing's guaranteed, nothing that says that we have to see these kind of rallies, but they do happen. And so it wouldn't be absolutely ridiculous to think that one could happen again. And so, is there any indication to suggest that that could happen in the near future? And if so, where might we go? So one thing I want to point to in terms of being a possible reason why we could go is that, even though crypto has been very much hurt by the FTX fallout, it's really, crypto as a whole has lost face with a lot of people. There's not a whole lot of interest in it right now. That didn't stop us from rallying in the past. And one of the things that could just lift crypto along with broader markets is just if broader markets rally. And so I want to talk a little bit about the stock market here. So I'm showing you the Dow Jones here. The Dow Jones has actually been performing, decently well. It actually looks like it's starting to maybe form a higher low over here before trying to push higher. It was up about 2% on Friday the 6th of January. The NASDAQ's not looking quite as favorable, but again, it also rallied about 2.7% by market close on Friday. And then the S&P 500 also rallied pretty well. And one of the reasons why this happened, or one of the things that people are pointing to, is we got some data out from the Institute for Supply Management, ISM, which puts out the different PMI numbers, which is the Purchasing Managers Index. It's basically an index that tries to, basically it's a survey. It's a survey of a bunch of different company executives, and they basically weigh in on their expectations of the economy, where they think things are going. Is business going to be falling off or picking up? Is demand going to be increasing, decreasing? And what these showed, both the services PMI and the manufacturing PMI showed, was really pretty bearish indications. They fell below 50%, which generally means that the economy is likely to be entering into a contraction period, or that's oftentimes what's happened in the past. And if you just read through the reports, they're quite bearish on the outlook for the economy, for demand, basically indicating that a recession is more likely. And we live in this really weird world now where when news of a recession comes out, the stock market actually rallies. And the reason for this is that the stock market is waiting for the Fed to pivot, to stop hiking interest rates, to stop quantitative tightening, and instead going back to cutting rates and going into quantitative easing. And so really these rallies are kind of in anticipation of that. People say the market thinks that this is more of an indication that a recession is coming, is more likely, and therefore they think the Fed is going to be forced to pivot when that recession would hit. And when that happens, the stock market tends to like QE, so people are trying to front run that. Now, we've talked about in previous videos how that's a little bit of flawed logic from the market, where actually when the Fed pivots historically, actually the bottom of the stock market then tends to follow afterwards. The stock market actually tends to crash after pivots. But you can get these big rallies in anticipation of a pivot. And so it's possible that we're going to see something like that in the stock market right now. No guarantees, absolutely nothing's guaranteed. It could be the market will just roll over and we'll go down. We won't have that. But it's the conditions are certainly there for this kind of anticipating the pivot, kind of a rally that could happen, push us up a little bit higher in the stock market. And that could be one of the things that give fuel to Bitcoin, give it the green light to have a bit of a rally as well. And if we did rally, if we just look at these prior retracements that we've seen in the past, seeing a rally up in the kind of 40% range off of the lows that we saw back here is not completely ridiculous. It's not completely absurd. And that would put us, right back around the 20, 21, 22K kind of range. And there's some other data that we can look at that make us think that any kind of rally would probably peter out at around that point as well. So if we look at some on-chain data, so I'm showing you here data that is the basically the cost basis of Bitcoin across time, broken down by how long the coin's been held. So this is the realized price distribution for Bitcoin. So essentially the way it works, what realized prices is it's the price at which a given Bitcoin was spent, and then how many Bitcoin were spent at that price level. And so of course, if one person's spending, one person's buying, and therefore it comes that new person's cost basis. So this is basically a distribution of cost basis for the Bitcoin network. So we're kind of down, over here in the 15, 16K range. I've filtered out the shorter time frame ones because those tend to be short-term holders who really kind of sell in and out really quickly, so it's not as useful to look at often. Usually looking at the longer term ones are more useful for identifying when you might hit resistance. The idea is that people have been holding Bitcoin for, over 3 months, and, they bought it back here, they've been holding onto it. They might just be waiting until Bitcoin gets back to that price level, back to 19K, back to 20K, so they can break even and then just sell out, right? They can say, okay, thank God, I've made my my initial investment back. I'm not going to risk it. I'm just going to get out. And you can get resistance when you start hitting those cost bases. And that's what we're really seeing, is that if we rally from here, around 20, 19, 20, 21K, this would be kind of the range where we'd start to hit a big wall of cost basis. And so it'd be reasonable, in my opinion, to expect there to be a lot of resistance here. And just looking at the chart, if you're just doing it from a pure technical analysis perspective, you'd also think that there'd be some strong resistance back over here. And the other thing that can make us think that would be likely is if we look at the long-term holder realized price. So this is basically the average cost basis for long-term holders. So people have been holding for more than 140, 155 days is usually the definition of that. And what we can see is that in prior bear markets, the long-term holder realized price has acted as resistance in these kind of rallies. Back here in 2015, after the bottom formed, had that rally that went up, got rejected exactly at the long-term holder realized price, came down, went up, tried again, got rejected at the long-term holder realized price, and it was the third time we got above it. Now in 2018, we didn't even get back up it to here when we got rejected, tried again, didn't even get quite to it, got rejected, then finally went in the big run in 2019. So here, our first test of it is certainly not an impossible thing to think that could happen. And, again, that would be putting us right in kind of that general ballpark that we might expect from these other things that we've been looking at. So the reason I want to say this is that, right now, I don't think anyone's expecting this. I don't think anyone is saying, yeah, I think Bitcoin is going to go rallying. And I'm not necessarily saying this is even necessarily likely, but I think it's certainly possible. And if we start seeing these conditions emerge where the stock market starts, rallying to the upside, looking, positive, if people are trying to front run any possible Fed pivot, as the data becomes more and more suggestive that a recession is incoming, either this year or early next year, and you start seeing the market rally into that, that could provide some juice for Bitcoin to start rallying as well. And if it does, my guess would be that we wouldn't get any further than around this level. But of course, you can imagine that if we were to start ripping to the upside like this, the sentiment might change very quickly. You might imagine a lot of people suddenly saying, all right, that's it, the bottom's in, we're going off to all-time high, the new bull run is here, et cetera, et cetera, et cetera, only to be caught in a bull trap right around here, the market roll back over, and people be left holding the bags up there. So in some ways, it's useful for us to think about these, not necessarily to say they're guaranteed to happen, but if they do, to keep a level head and say, is it really a guarantee if we see a rip up to the upside from here that's it, that the bottom's in, we're going to go setting new highs? Or is it the possibility that we're just setting up for a bull trap to get kind of people's hopes up, they buy in right around here, only to get rejected back down to the downside? So I wanted to make this quickly to talk about this, because I do think it's not impossible we see those conditions start to unfold in the stock market. And if they do, watch what Bitcoin does in reaction and watch the interaction up here. And really just kind of keep a level head in the hype. I think there would be a lot of hype if that happened. But if it does happen, really be critical and think, is it really as likely as people probably at that time would be saying that, it's all sunny skies from here on out? Or is there a possibility of rejection? And I think it's a lot easier for us to kind of get this in our minds now before that hype could emerge versus after. So again, what I'm saying is I don't think that this is guaranteed by any stretch of the imagination that we go on this relief rally. But if we do, I just wanted to talk a little bit about what we might want to expect and just how we might want to think about this from a more level-headed, data-driven perspective, especially when emotions might start running high as we start rallying back up into those levels. So of course, not financial advice. None of this might materialize. No one really knows what's going to happen. But I think this is a hypothesis that's interesting to watch. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.